Hey, what's going on, family? Back again with another episode of Tax-Free Living, where I teach entrepreneurs just like you how to live tax-free. I'm super excited about today's episode because I'm about to save y'all a lot of money. So if you've been loving this channel, if it's been valuable for you, if it's been helping you understand how taxes work and really feel more confident as an entrepreneur, as a business owner about keeping the money that you earn in your business, please like, subscribe, comment, share this video because I just want to educate the masses. As you all can see, I'm excited about taxes, which is crazy. Because how many people get excited about teaching taxes? I do, because I understand that if I can help people get rid of or eliminate or just lower their number one expense, right? How much better would their life be, right? How much better would their life be? So today's topic is the top 5 year-end tax strategies for 2022. Before we get into today's episode and I give you the top 5, I really need to shift your perspective. I can give you the skill set, but I first want to give you the mindset. Did you know that there are 2 tax seasons? Most people think it's one, but there's actually 2 tax seasons. There's tax paying season, and then there's tax planning season. Tax paying season is January through April, where tax saving season is July through December, the last half of the year. And I tell you all, like I tell everybody else, if you take care of business during tax planning season, you're gonna have nothing to worry about during tax paying season. But most people are failing to plan, and therefore they're planning to fail. Without further ado, y'all, let's get started. So strategy number 1 is to take advantage of the 179 deduction plus bonus depreciation. Simply states that on equipment like cars, desks, computers, buildings, whatever, you get to accelerate the depreciation on those assets. So if you buy a vehicle and you take advantage of the 179 deduction plus bonus depreciation, if the vehicle is less than 6,000 pounds, you get to write off over $19,000 in the first year, even if you get it in December, right? Crazy. Now, if the car weighs over 6,000 pounds, you get to write off the full cost of the vehicle. If the vehicle weighs over 6,000 pounds and it's a $50,000 vehicle, you get a $50,000 tax deduction this year. That's why you see so many celebrities and other business owners going and buying these big vehicles at the end of the year, because they want the write-off. They understand that even if they get the car in December, they can still write off the full cost of the vehicle if it weighs over 6,000 pounds. That is to take advantage of the 179 deduction plus bonus depreciation. And you can also do this with real estate. Cost segregation studies plus bonus depreciation, you can write off up to 20 to 30% of the building's value the year that you get the property. So take advantage of the 179 deduction. And I'm going to go through these pretty fast because I'm probably going to do an individual video on each and one of these. So I just want to give you all the strategy high level so that you can run the play before the end of the year. Okay. So number 2 is to accelerate expenses. This is a hack. So if you're a business owner making less than $25 million a year, you're most likely on cash basis accounting. Cash basis accounting means that the money is counted for in your business when it leaves and when it comes in, whether the services are rendered or not. Here's how we can take advantage of the cash-based accounting method. We can prepay expenses in December that we won't need to pay into January, February, or March. So we can accelerate the expenses in December. And if we do so, we get the tax deduction right now. For example, let's say you're gonna have $10,000 of marketing expenses that you know you're gonna have to pay for January, February, April. You can pay those expenses, $30,000 on a credit card in December, take advantage of the tax deduction in December, even though you know it cured those expenses officially to January, February, and March. So now we're accelerating expenses so that we can take advantage of the tax deduction right now. So I want you to look in your business and see, what expenses do I know I'm gonna have to deal with that I can write off today? That's an amazing hack. So think about that. Number 3 is to take advantage of the Augusta rule. Now I'm gonna do an entire video on the Augusta rule, how to work it properly. But for now, I'm gonna keep it high level so we can get through this video and get through all 5. The Augusta rule simply states that if you own your primary residence, you can rent out your residence up to 14 days per year, and you don't have to recognize that rental income as income on your personal tax return. So What that means is, because you're a business owner, you can rent out your primary residence to your business for up to 14 days a year. You receive the rental income personally, tax-free. But not only that, your business gets a tax deduction for the expenses incurred for renting the primary residence. I'm getting excited. In other words, you can rent out your primary residence to your business, charge at a reasonable rate for up to 14 days a year. Your business gets the tax deduction as rent expense, and you personally don't have to recognize that income on your personal tax return. Let's do some math. Let's say you were able to find out rent comps that your house would be able to rent out $1,000 per day. You check Airbnb, you check VRBO, you check Zillow. Your comparable rental rates in your area are $1,000 a day. And when you're renting it out, use it for content. Have a meeting, host a mastermind, do some business activity, right? You get to charge your business $1,000 a day for 14 days. That means you get a $14,000 tax deduction, and you don't have to recognize that $14,000 on your tax return as income. So we just siphon $14,000 from our business to our personal selves, tax free. And you can do this before the year ends. 14 days, you got time? Implement the Augusta rule. Okay, that's number 3. So number 4 is establish a retirement account. Now I'm gonna do an entire video, probably series on this. If you're LLC, my recommendation would be a SEP IRA. If you're an S Corp, my recommendation would be a solo 401k. You can put up to $61,000 in these investment vehicles. You get a $61,000 tax deduction for investing money and building generational wealth and building financial freedom. Why not get a tax deduction and increase your net worth at the same time? So establish a retirement account before the end of the year. And here's the thing, as long as you establish the retirement account before the end of the year, you can fund it next year. You have up until March or April of the year, depending on what type of business entity you are, to fund it. You just have to establish it by December 31st. Number 5, and one of my personal favorite, is to take advantage of the QBI deduction. Now, for those of you all that don't know, the QBI deduction was enacted when Tax Cuts and Jobs Act was enacted. It simply states you get a 20% deduction just for being a business owner. Does it get better than that? You get a 20% tax deduction just for being a business owner. So make sure that you're taking advantage of the QBI deduction by making sure that your accountant puts it on your tax return. Now, their accounting software should do it for them. Some of these accountants be crazy. I don't even be doing paper returns, but I want you to make sure that that QBI deduction is on your tax return. And for those of you all that don't have a business, start the business so you can take advantage of the QBI deduction. It's a 20% tax deduction just for being a business owner. That's the American dream. Give me a 20% write-off just for being a business owner. You know what I'm saying? So those are the top 5, guys. Again, take advantage of the 179 deduction plus bonus depreciation. Prepay your expenses is number 2. 3 is to leverage the Augusta rule. Number 4 is to establish a retirement plan. And number 5 is to take advantage of the QBI deduction. So if this was helpful, guys, like, comment, subscribe. Let me know in the comments what you want to learn about. Let me know what you want to hear about. Let me know what tax questions you have so that I can answer them on another video. All right, guys, I love it here. I'll see you all next time.